should be both on YouTube and on the virtual trading floor. Back in Long Island again, so doing the constant computer swap, moving around a lot. So hopefully everybody can hear me everywhere. Get a little nervous because I'm not good at tech. Let's jump into it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Thank you, Robert. Yep, position disclosure here. I got stopped out of Nicola. I almost exited it on Friday into the close. I didn't want to follow the rules, the game plan. It's the right thing to do. So I ended up losing a little bit more than I would have, but it was still a positive trade, just giving back some profit on a swing trade that I was trailing and getting stopped out. So that's exactly what you want. Put yourself in the win-win situation and you get stopped out. I got an Amazon and an Airbnb today. I didn't keep either of them very heavy. Amazon, I traded it really well, so I have a profit cushion. But it really didn't close well, so that's why I sold some into the close. Not heavy right now. It honestly kind of looks like it wants to pull back further. But Pat was also saying on the radio into the close, keep it simple, stupid. Don't just liquidate things necessarily if we're still above support, which we can talk about that in a second. And Airbnb looks okay. It didn't close fantastically well either, but I'm also positive in it, so I decided to keep some. So let's go to the videotape, as they say. Okay. All right. So the market super disappointing today, if you ask me. Where did we close on a percentage basis? SPYs are up 0.25%, Qs are up 0.25%, and IWM's up 0.3%. I'll tell you, it sure didn't feel like it. It felt like a super weak day today. Probably half my swings are red and half my swings are green. At one point today, briefly when we were at lows, at one point during the day, I think every single one of my swings was negative by some amount, even if it was just a little bit. And then it just seemed like there was a lot of things that were down today. A lot of things weren't trading well. And it's a little bit of a mixed bag. So on the one hand, I was really excited doing my pre-market research this morning. I really felt we could get upside follow-through. But by 9:40, within 10 minutes of the open today, it honestly seemed like that was out the window. So you got to be able to pivot. You got to be able to adjust as the market kind of gives more information when it opens. And that's what we're always dealing with whenever we're dealing with these large gaps, right? That's what I was saying in the morning meeting today is, like, I'm excited. I think that this market can certainly move higher today. We're set for a gap up. The IWM is gapping above resistance. SPYs, Qs, IWM all had inside days. We're gapping up above the inside days. We're no longer extended. This ADMA on the daily for the SPYs is now caught up to 410. I kept saying that in these first couple of trading sessions when we were extended, that to feel confident for upside continuation, I would want to see SPYs at 410. So it really seemed like pre-market that everything was kind of lined up properly. The big worries on Friday that I felt brought us down. So first of all, Thursday, just to recap a little bit, Thursday we closed tremendously well, right? We had these couple days of rest. Now we're in the month of June. The market price corrected down to that equilibrium area. So we price corrected kind of the previous day into that morning. And then that was the day that Microsoft warned pre-market, but it was just related to FX, and they bought this thing up all day. We closed at highs. It looked fantastic. You come into Friday, pre-market, bad Tesla news, bad Apple news. They're such heavy market-weighted stocks. It's also Friday. Fridays have been consistently bad all year. People have just not been wanting to take risk into the weekend. So Friday was a weak day, but we still, closed above 410 support. It just turned out to be an inside day. So honestly, I didn't think Friday was the end of the world. After Thursday's close, I wanted higher, but when you got both, potential warnings, growth warnings coming out of Tesla and Apple, and they're such large market caps, just the fact that the market didn't break down on that news, I thought was decently okay. And it's like, all right, we held up, and then the market's got this big gap up this morning. We're getting above the levels. I'm super excited pre-market, ready to rock and roll. And there's so many setups out there this morning too. We discussed that in the morning meeting. There were so many things that you could have went for today. And honestly, we talk about, I think I spoke about it last week, one of the really important keys to trading success is to know when you feel like you have a very strong advantage and to just go hard and put on a lot of risk and put on a lot of trades and trade a lot and go after that advantage, and to also know when you don't. When the market's extended, when it's a difficult spot, when we're opening in a difficult area, you don't get the gap that you want, you don't have a strong advantage, you have to be able to take a half step back and not trade as aggressively. In a lot of ways, pre-market, I thought today was the former. I thought today was a day that you would want to be aggressive, that you would want to go for it. There were so many setups today because of Friday's kind of rest day there with the inside day. There was a lot of stuff to look at. Pre-market, we were talking about financials, we were talking about some of the growth stocks, we were talking about the big tech stocks, we were talking about Amazon. So many setups, potential continuation setups today, and the market failed to give that continuation. Again, we closed up 0.25% today. I don't know what the breadth looks like. If I had to guess, I would say that it was bad. I'm just talking anecdotally here because it seemed to me like there were just so many things that I was looking at that were weak early and didn't trade well. So definitely didn't get the upside follow through I wanted, but the market told us that right away. I really felt by 9:40. You guys probably even hear it by the flipping. I'm the kind of person, and it's probably not necessarily a good thing. I wear my emotions on my sleeve. I'm very easy to read when it comes to that. And you probably could tell in the tone of my voice right away. And it was the same thing. It was the IWM. How many times has the IWM been the clue that today's going to be a day where we could go, or today's going to be a day where we don't? So, still have the SPYs up here, but you can see here's your big gap up, right? Really big gap up. We're still well above 410, maybe above 415. That's kind of this resistance zone area. We could start getting some continuation if we're having a strong day today. So we're gapping up to, this just below 415, right? 414 and change. Very extended though, right? We're opening up at, let's call it 414.75. ADMA is all the way down at 411.50. So we're set to open up $3 extended on a 5-minute chart, right? So it's a lot, but it's okay. Big gap up this morning. It's okay if the market can digest the gap well. What do we want to see? Ideally into this type of gap, well, look at the SPY chart. This is actually exactly what you want to see. You want to see sideways price action. You want to see the ADMA catch up to the base of that price action. Honestly, this setup right here, with this inside 5 at 950, if you're only looking at the SPYs in a vacuum, which we don't do, I absolutely love. This is a long setup here at 950. You get the consolidation. So this is basically a bull flag, right? The flag pole is the gap. ADMA, when the flags usually continue, as soon as the ADMA catches up to the base. So we get 25 minutes of time correction. We go sideways for 25 minutes. The ADMA catches up. It concludes. This is what makes me really love it. I love when there's an inside 5 at the end of a bull flag right as the ADMA catches up, because you can execute that. It creates for smaller risk. So you could have bought the break of this inside 5. You easily could have bought 414.55 with a stop loss at 413.78. So you're taking on, what is it, like 75 cents a risk or so? Not terrible for the SPYs. And then it does exactly what it's supposed to do. It gives you this beautiful lift-off continuation. And then that eventually fails. But let's take a look at the other indices at the same time to see if we're getting the same message. Qs, a little bit more of a price correction. Not the end of the world, because it's kind of choppy. We discussed in the morning meeting that 310 is important. That ideally I wanted to see the market price correct and hold above 310, roughly hold above the inside day high for the Qs from Friday that they have. So you get your SPYs perfectly kind of moving sideways, basically giving a bull flag. You got your Qs having kind of choppy time and price corrective action, not the end of the world. Basically just pulling back from an open price of 310.75. At lows we pull back to 309, but your gap fills all the way down at 306.50. Not the end of the world. Similar situation here. The ADMA catches up. You got this inside 5 right as the ADMA catches up. You could have executed that as well. You had Amazon really holding in and making highs basically at that time. That was a potential layer of probability on the side of your trade. You had Apple holding up, just fine. I know Facebook not so great. Microsoft, but Google, monster this morning. So you look at the Qs and you're like, all right, SPY's looking great. Qs, time end price correction, not terrible. Here's your warning sign, IWM. Every time. It's always this Russell. If the Russell's not giving us the confirmation, we don't get the price action. This is not what you want to see. If you're if you're bullish and this market's gapping up as big as it is, this is a potential breakaway gap for the IWM. IWM looks fantastic coming into today. Maybe it's a little bit extended compared to the SPYs or Qs because it's been so relatively strong. You have the inside day here on Friday along with the market. We've discussed the importance of this 188 area. It's really kind of the space. I've been describing it as the space between 187.50 and 188. That's the real breakout area. This is the equivalent of SPY 410. Right? This has been a constant comparison that I've been making. Right? We have SPY 410 as the major support area for the market for the beginning of this year that we then lost in May, but was recaptured at the end of May. That same level for the Qs is 317.50, 318. That level we held it all year. We lost it in May. We have not been able to recover it. The Qs have been relatively weak. WFRD. Seeing 29.41 is the last print. The 32. No, it's not real. It's just 200 shares. Doesn't look real. Anyway, the Qs here are still well below their level, and that's because they had a ton of relative weakness in May when the market lost Apple and Microsoft. And the IWM has not fully recaptured its spot either. That again, the SPY 410 equivalent is basically this 187.50 to 188. We need to get back above that. We did it on Thursday when the market looked so strong. Friday, Tesla, Apple wrecked the market down, but you know what? Rest day, low volume, not the end of the world. Today we're gapping up above it. We're getting above this 188. I want go time this morning. I really do. This had me so excited. IWM is set to open up at 189.29. This is a technical breakaway gap. I want to see these shorts panicking this morning. Oh my God, IWM is back above the level, SPYs are back up the level, the whole market's gapping up. Maybe they're not panicking in the NASDAQ specifically, but I want this to lead to a short squeeze this morning. I want bears to be panicking. This market gaps up, and zero buyers to be found in this IWM. We go straight down from 189. What did I just say? 189 quarter or so, 189.30, down to 187.50. So we lose the 188. Again, we held 187.50, which is the low end of that range. Okay, fine. But this is just too hard and too fast of a momentum move to the downside. It becomes very difficult for the market to fully negate this and make a new high on the day. And you kind of need that. Again, maybe not the end of the world by the second 5-minute bar, because it is just a price correction. It just price corrected down to the ADMA. But there were just so many stocks out there that weren't trading right. The IWM was not trading right. Jerry's right. The XBI, which was the trade of the day on Friday, was not trading right. So I know Rowan took a little bit of a buy off this low, which was a kind of a gutsy buy, but he recognized the tail into equilibrium, so that's why he kind of went for it. You do still have the SPYs and Qs holding up. Maybe the SPYs and the Qs hold up really well in this IWM, just needed a deeper price correction, holds this ADMA and kind of begins to work its way back up. Again, it's not ideal, but in a market that's this illiquid and moves this hard and this fast, could it happen? Could we, snap right back to near highs or rest in front of those highs and then get continuation? Yes. It's just tough. And you really need this low to now hold. Next candle at this high, it's like, okay, maybe, maybe. But then this closes with this upside tail on this third candle, and that just wasn't right. Fourth candle fully fills the gap. And again, I know the fourth candle here also having a big tail on the gap fill, but it's just too deep. So by this point of the day, and I think I started saying it around 10 a.m. or maybe it was a little bit later than 10 a.m. At this point of the day, I'm really not expecting that upside follow through that I really was excited for and thought could be a possibility pre-market. What I'm just honestly hoping for is that the market can hold up. Because the weakness in the IWM makes me so nervous because of what we've seen that I think it's a higher probability that the IWM pulls down the SPYs and Qs than the SPYs and Qs pull the IWM back up. And that's just what we've seen with consistency, right? It's, it's not, I'm not a genius to be able to tell you that information. It's just that that's how this market's been. So, fine, we do bounce a little bit off this low. This becomes a low here. We couldn't really go after highs. Even, every time we got back above 188, I was saying to you guys, like, okay, market's improving here. We're back above 180. It looks a little bit better. But I never hit that point where I was excited again like I was pre-market. And I think I even said it even when we got back above 188. I was like, the only way I can actually become excited about this market again is if the IWM makes a new high. And I can't count on that based on the way that we sold off. And then eventually, you really lose the SPYs and the Qs after 11 o'clock. And then this market was just wacky midday today. There was no resting going on, no midday rest, right? The midday rest is obviously very common. SPYs, market just big down move at 11 into new lows, consolidation, new down move. Then you've got the news that was kind of coming out of Apple. The market seemed to like that Apple was saying that they were not adding on new privacy restrictions because that can negatively impact your Facebook and Snap and Pinterest and a lot of those companies even further. So then we saw all those names catch a big bid right back up here. It was like there was no liquidity at 135. Just bam, right back up. We're like negating this, and then bam, right back down. Like this price action here midday was just totally nutty. The only slight silver lining was that at 11 o'clock, or a bit after 11, when you finally lost the SPYs and the Qs to new lows, the IWM actually wasn't making new lows. You would almost expect the way the IWM traded off the open, that when the SPYs and the Qs begin to crater post 11 o'clock, that this IWM wouldn't actually still be fighting for this 187.50 to 188 area, that this thing would now be down, a percent, just based on the way the market's been trading. You would almost expect the IWM to be down 1.5% or 2% as the SPYs and the Qs are, getting flat or going negative, kind of as they did there briefly. So you didn't really get those new. I mean, eventually you did at 12:30. Briefly, you ticked to new lows. But the IWM, despite its opening weakness, actually kind of held in okay. So just to take a half step back, off the open this morning from a game planning perspective, I'm excited. I'm thinking that it's the opposite of a less is more day. I'm thinking we got to go for it today. I think we got to make money today. I think the opportunity is there. So if anybody went for it early, I can't fault you for it, even though we did say you always have to be patient with these big upside gaps. You got to see how the market handles the big upside gaps. You got to see how the equilibrium catches up. So hopefully people were patient and they just recognized what I recognized. I was patient off the open, though I did go after Airbnb and Amazon and a couple other things. I was broadly patient. Then by 9:40, I had to flip my game plan. I said, I had all these inside days from Friday that I thought if they were given relative strength could trigger and that I would want to be buying if the market could, kind of catch up to equilibrium. If the whole market was doing what the SPYs did, I think there was a lot of things you could be really excited to buy at 9:55 today. But the IWM has just been our confirming factor. It was not there, so I adjusted my game plan to go from planning on being super aggressive to being significantly more cautious, managing my positions. Had already opened, Amazon and Airbnb by that time, so managing those positions, and then just kind of wait and see. Because the flip side was, I know, lowercase James, if you're here, you were asking me at some point today, midday, about shorting, and I didn't have the conviction in that either. It's like yeah, the market failed to give the continuation, but to go back to Pat's point, we're still above support, especially for the SPYs. IWM is battling back and forth with it. And I didn't have the conviction to just jump in short either. Maybe today's just another one of these range type days. I need to just kind of wait and see. And even at the end of the day today, I don't know. I'm not excited in either direction. I don't. Again, it's like Pat was saying, exactly like what Pat was saying when he was on the radio into the close. You know, not a great day today, but keep it simple, stupid. We're still above 410 in the SPYs. We're still above support. Broadly, while we're above support, you're better off being long than short. If we have a big gap down tomorrow, that could be a concern. There's no, you know, I feel like we're all a little bit scarred. Is my man lowercase James here? Because I'm talking to you, pal. I feel like we're all a little bit scarred in some ways from the market in April, May, where, you know, how many days were there over the course of these 2 months where things were looking good on the close one day, and then the next day we gapped down 1%, just almost out of nowhere, and then it was a down 4+% day. How many times did we see that? A bunch, right? A bunch. So I think that we're all a little bit nervous that, like, any day that we don't close well, the next day is that day where we're going to gap down over a percentage point, we're going to gap down below these support levels, we're going to see a gap and go to the downside. And that could happen. It may be true, but it's very hard to just predict that while we're still actually above support. So, you know, going back to knowing when to be aggressive, knowing when to be defensive, I thought there was a lot of opportunity today. Market, I thought, by 9:40. And again, this is why it's so important. You know, when the screen that I share with you guys when I'm on the screen share, I share for a reason. It's just SPYs, Qs, and IWM. Because you got to pay attention to all three. You got to be watching all three at all times. Because, just to repeat myself now for probably the 4th time in this afternoon meeting, SPYs are just looking so good here at 10 a.m. This setup, I love this setup. But where's your confirmation from this IWM that's so important? It's just not there. What am I going to do? So most things I did not really kind of get involved in. I got stopped out of my Nicholas swing, which I'm fine with. You know, trailing stop to this low here. Garbage company. I just got it in as a trade on this kind of breakout day back here. So that one shook me out. I'm out. Fine. Amazon, I kept a little bit. I'm nervous about keeping it, honestly, because this is not a candle that you want to see. It is extended, but overall this thing's been trading really well, and the market still is above support. So I liquidated a bunch into the close. I traded it really well intraday. So, you know, this 125 area is actually about my price, and normally we don't want to be keeping swings unless you've got a good profit cushion. But I traded it well enough today where I'm up P&L wise in it, and I sold a bunch in the close. So I said, you know what, I'll just keep it. Let's see how we gap tomorrow. But I'm going to keep this one on a short leash. Airbnb was the one that you guys put on my list. You put it on my radar. We're looking at a lot of setups like this for the inside and up. I actually thought Airbnb held in really well today, considering that most growth stocks did not. So this candle today, with this little bit of a bottom side tail here, is actually not terrible. It's still closed above the high of the inside day. It's not great. My price isn't fantastic in it, but I'm up a little bit. So I decided to add that small to my swing list as well. So, you know, I'm built back into 14 swing positions here. So that's kind of upticking as the market has given me the signals to do it. But I'll be very quick to get out of the way again if this market starts to break down. And I think that's it. I think that's all I got. So, happy to look at the questions that you guys have. Not seeing a whole lot. Yeah, XBI is just a super disappointment today. Honestly, this XBI, there's reason to be concerned. I was so happy with the relative strength on Friday. This thing looked so good on Friday. It was like one of the strongest sectors that you could find. The whole market was trading poorly. Tech was trading poorly. Growth was trading poorly. A lot of times, XBI will move with these growth stocks a little bit. And that one company got bought out by Bristol Myers or whatever, and this thing was just trading so well. It got back up to this, I keep talking about 7150, right? 7150, the big level here for XBI. Friday's high is 7153. When it got up there intraday, it was extended. Tremendous relative strength. I was pumped that it consolidated beneath 7150 all day today because I thought that would be setting us up for a good breakout trade either for today or for tomorrow. And I didn't take that buy today, luckily. And the reason why didn't I buy XBI at the open if it's having a breakaway gap is just because everything's a little bit too extended. You could have bought this XBI. I wouldn't fault anybody who bought XBI off the open small and was looking for a bigger ad or something and got stopped out. Can't fault you for it. But this, at the end of the day here, is no good. You have a potential breakaway gap that fails. So you have a breakout failure in the XBI. And then this was like, even though Friday was the strongest sector you could find, today was one of the weakest sectors you could find. This thing could not get out of its way. It was negative all day today when the markets were positive all day. And you have a false breakout. Just after I'm getting excited about how relatively strong it is, we basically 100% negate Friday's day. You have a false breakout, granted not on huge volume. It is still above the key support 66 that we're talking about, so I'm sticking with the trade for now. But this XBI was a super disappointment. Oh yeah, Damien bringing up a couple great points that we were paying attention to. There were other signals in addition to the IWM that the market was just not right today. One of those is the dollar. The dollar here has really become, I know Paul keeps talking about it, the dollar has really become like one of the most important factors in this market. When the dollar is having these really strong days, we're not getting upside follow through on the market. It's great. The UUP here is just the ETF. I look to get a quick glance at the dollar. It's great about the pullback from the run up it had. It broke the accelerated uptrend line that it was in. Given this really deep pullback, today's not the end of the world because it's been in this consolidation now between like 27 and 27, 40, 27.50 for a while. But we did trade up on some strength to the upside of that consolidation zone again. So be careful if the dollar starts breaking back up. And the TLT also lost a little bit of its stabilization effect. One of the things here that's held the market up, I think, is that before the market gave the bounce, the TLT gave the bounce. Interest rates came down a little bit. Initially, that felt like a fear trade these first couple of days, but then it just turned into stabilization. And that's what, if you're long risk assets, honestly, I think what you want more than anything else right now is stabilization from interest rates, stabilization from the TLT. We don't need the TLT really ramping all the way back up, but we certainly don't want it breaking down. So the stabilization that we've had here for most of the month of May, where we're stuck between like 114.50 and 120, has been good. And then today, just when we're thinking maybe the market can run, well, look what this TLT did intraday. This downtrend intraday was disgusting. Up from 9:30 to 11:30 or so, just straight falling off a cliff down and getting to the low end of that support area. You arguably closing below it, giving us now. This is one of the lowest closes for the TLT on the entire year today. Second lowest, just eyeballing it. Second lowest close for the TLT on the entire day today. Just not great. So yeah, there was a lot of factors, and the VIX was the other one, right? This UVIXY that we look at for a quick glance here at the market, making highs here at 9:45. You're looking at the SPYs. You're like, all right, SPYs are holding in fine, and then 9:55 it kind of gives that little bit of a move here. I know this went back down to lows, but then real quick here by 10:35 it's right back to highs. So you didn't have the VIX confirmation either. So just lot of signals out there. I told us pretty quickly that you got to take a step back. Dave asking about Rite Aid. Is it above 6? Ooh, I missed the trade. Rite Aid was on the radar on Friday last week for a trade through $6. Missed it. It got upgraded, I think, on Friday, and I identified the level at $6, but then the whole market was out of play, so they sold this off. Where is this? Friday. Yeah. So when this thing didn't break $6 early in the day on Friday, at one point I had a buy stop at $6. At $6 to get long in Rite Aid on Friday, but this opening price action, the volume wasn't there. The opening price action wasn't good. I pulled the stop. Eventually, I guess it turned into an upside grind, closed above it. They gapped up and then gave continuation. It's above the level, so Rite Aid looks okay if you're involved in it. Definitely a slower moving name, but it's one that we've traded as a team with some success in the past. It's worth keeping an eye on. So I think it looks decent above 6. Tough to chase these prices though. You don't want to buy this name too high or when it's too extended. So hopefully you're in it. Thoughts on the CRM daily chart? Ooh, not great. It's extended, but it's an inside and down. So I think you just got to be patient. It's not great, but it's also really extended still. because the earnings move and how it traded since then and the day after the earnings move. So I think your best case scenario is further consolidation here with this 80 EMA catching up with the market continuing to hold. But you can't like the inside and down here in the week close. So yeah, keep an eye on it. But you know, it needs to kind of reset up for you. CRM is inside still a Friday. I mean, that's not what I see on the daily chart. No, it broke down. It's inside and down. You can see here. Here's the 5 minute from yesterday. Friday's low was like 183.75. We closed below the inside day low. So it's technically an inside and down. So that setup is broken. And it could turn into a bull flag if it goes sideways further here. Can we walk through how I traded Amazon today? Sure. I didn't want to chase price on Amazon. I was a little bit worried that this was going to be a buy the rumor, sell the news situation for Amazon, which we certainly see. Amazon had a really big run up into the split, even though the news itself was announced months ago. They ran it up into it. The flip side is the stock's been relatively strong. I think that Amazon's cheap here at these prices when it's pulled back 40% or so from its high to its low. So it's just a heck of a stock. I've been saying it forever. I don't want to be long Amazon. I want to be long Amazon Web Services. But right now I can't get what I want. I can just buy everything. I've been saying it for a long time now. I think that the sum of the parts is worth more than the whole when it comes to Amazon. But management is incentivized to not break it up. I wish they would break it up. So definitely on the radar for obvious reasons. And the one thing I'm excited about with Amazon and Google is I didn't like trading them as $2,000 stocks. It's just the spreads were just too big. So I would pretty rarely trade Amazon or Google. I would really have to have conviction on the trade, and you're given a lot of room, and you can't take a lot of size. So I'm super pumped that trading at 125. And you got an inside day. So this is one of the names, right? Like I said in the morning meeting, I was very excited about a lot of these inside and ups with the market potentially gapping above, that we could get a big gap and go day. I thought there was a real chance today that the market is gapping up 1%, has some volatility off the open day, but digested in the small time frame, and then just goes into, I know we can all visualize this in our mind because we've seen it, just goes into one of those like straight up trends where it's like going up on like a 45-degree angle. So that's what I was looking for from the market. Amazon was set to gap up above the inside day, so I wanted to get a little bit of a jump start, but I didn't want to be too heavy either because the market, right? I got to be, the market's telling me be patient off the open. I want to be involved in Amazon. I don't want it to let it get away from me. So I'm gonna be patient here. And it was kind of a very similar situation with Airbnb when one of you guys communicated it with me. So my game plan was to start with a pre-market nibble to build into it. Because here's the thing, right? The momentum trade in Amazon is through or versus 124.40, Friday's high. The problem with momentum trades is that they need momentum to pay you. And I'm concerned that I can't get upside momentum in a market that's gapping up this big and is extended. So I wanted this thing, 125 was acting as some pre-market resistance before the morning meeting. But it was trading above that 124.40. If it was trading at 123.50, that would have been great, because then I just buy through 124.40 when I have confirmation of the momentum. So I wanted to kind of create a double game plan on this with 2 outs, which is something we've talked about in the past. Because the momentum out, like I'm just saying here, is going to be this 124.40. But you don't know that your idea is wrong if you're getting stopped out there. I know my idea is wrong, honestly, if it breaks the low from 2 days ago, which is 120. And Pat was just saying in the close, like, well, it's still above 120. Like, as long as it continues to hold there, okay. You also could try to use the inside day lows, 121, basically as a stop loss. But, one of those 2 days lows, that's when you're saying to yourself, all right, I know my idea was wrong. I can stop myself out and know the idea was wrong. So I prefer to trade for right and wrong. I prefer to trade, let the stock tell me that my idea was wrong, and fine, then I'm stopped out, and it is what it is. The problem with that is I can't get a lot of stock. How much stock can I really buy at 125 if I'm giving it down to 120? What's my risk reward there? You know, my target's 135, right? And yeah, I could get follow through above my target, and I'll have a game plan in place to probably pay me beyond 135. But I can't just buy a boatload of stock versus 120, 121, and 125. So I'm going to nibble on a smaller position that I'm planning on kind of giving the room till I know where I'm wrong, and I can afford to do that. I'm comfortable with my risk. But I also want more stock, so I'm also going to look for that momentum trade. So my game plan pre-market before the morning meeting was to do a bigger ad through 125 versus 124.40. The problem is I'm yapping away at you guys in the morning meeting, and then I type up Amazon in the morning meeting, and it's at like 125.40. It's 40 cents above it. So I'm like, damn it, like, how's this thing just not gonna let me in now? So I built into it. You know, I kind of came up with like a happy compromise of a game plan where I was going to build into it, but maybe give it to like 123-ish on a heavier position. Not as heavy as I was going to get through 125 versus 124.40. Not as light as I would get going all the way down to 120, 121. Kind of somewhere in between, and utilize like 123 as just kind of a broader stop loss, which again was a bit of a pre-market stop. So, I mean, you know, whatever, here's my executions on the trade. This is me building into it. I got, you know, a couple of nice buys here. This was a nice little lucky buy at this 124. But, you know, gaps up above 125, which is where I wanted my buy. You know, and again, some of these buys, it shows all the dots here. Some of them are actually from pre-market. So I think I called it out. You know, I bought a little bit above this 125 here. Like, all right, I'm going to buy a little bit. All right, 125, I'm going to buy a little bit. All right, pulling back now to that 124.40 area. This is where I really want to be buying in front of this 124.40 area. In an ideal world, if there's momentum, it's going to hold 124.40 and it's going to go. But I recognize that my ADMA is still all the way down here and the market might not cooperate. So I'm giving myself this room to 123. Really, and the ADMA, by the way, on the 5-minute, which is important to me, is above 123. I'm comfortable with that small time frame. So I just kept kind of building into it, and then it went. And then I traded it. I booked profit, reloaded a little bit, booked profit, reloaded small on the way down. I'm getting concerned, doesn't belong here, market's not looking good. But you know what, it's still above my out, I'm still sticking with the game plan, get a bounce back, take a little bit off, pulls back a little bit, reload a little bit, and then like I said, I can't keep too much of this. It's just not closing well enough. I got this not great daily looking candle, but these buys here plus these sales here have me up enough P&L where, you know what, I'm going to keep a little bit. I'm going to, you know, stick with the game plan a little bit on some of this, but I can't keep too much with that daily candle today. So here's me, you know, dumping a bunch kind of into the close and still keeping a little bit. And that's how I traded it. So it's Amazon. From Anthony here. Just glad to come out today, able to come to the charts tomorrow. Got most of the Neo initial move. Yeah, Neo was one that I missed that I thought looked great for today. It was on my list. Great opening momentum move, and then breaking this low. But this is a shakeout, and this, by the way, this is a perfect example, this Neo, on why I don't like using stop losses if the ADMA didn't catch up to it, because this happens so much. This trade is still fully intact. It almost made new highs in the day. This is not broken because the ADMA didn't catch up to the low yet. And then it pivoted and it got right back above that opening low, and then that could have been a low with continuation to new highs. So not easy because it's very hard. If you got stopped out here, I don't fault you for it. A better stop maybe would have been Friday's high, which is what I was talking about in the morning meeting. That actually would have held for you. But if you got stopped out here a lot, I can't fault you for it. You took your trade, you got a momentum move, you got your risk covered, you raised your stop, the ADMA didn't catch up, fine. You just recognize that this is exactly what happens when the ADMA doesn't catch up. That's when you get the shakeouts. I always want, ideally, I can't always do it. Sometimes you can't do it, and it is what it is. But ideally, I always want my stop loss to be below the ADMA, because otherwise you're relying on momentum to pay you. I don't want to rely on momentum to pay me. shouldn't we want the TLT to slowly grind lower and interest rates to slowly go up? I don't necessarily think so. I want TLT to tell me that the interest rate hikes are priced in already, that the TLT got ahead of the Fed, which would be more of the sideways price action. And that's really what I want the TLT to tell me. Slow grind down, maybe not the end of the world, but you know, as long as what we had in March and April is not what you consider to be a slow grind down, I would consider it to be a fast trend down. I would much rather this just be stable here. From Steve on SAIC, and I'm supposed to hop at 5 o'clock today. This thing got up huge. I know you generally avoid thin names, but curious if you have any thoughts on what the SAIC gap on earnings this morning, and then holding while the indices falls tells you. Generally has a weak correlation. So that's exactly what I was going to say here. It doesn't tell me. So SAIC holding up with the market's not on a day when it reported earnings and gapped up this big tells me nothing. This is exactly what you expect. You expect a stock that's on earnings to not have a strong correlation at all to the market, and you're telling me that this one normally doesn't have a strong correlation to the market even to begin with, so let alone on an earnings day. That's why this is exactly what you potentially want to focus on. This is potentially what you want to focus on when the market's a little bit more difficult. From Jerry here, CTRA at 9:35 on the inside 5 trade. You gotta love this daily chart. You gotta love how it's gapping up above the inside day here. The inside 5 is a bit extended, so ideally if I'm buying this inside 5, I would want to use this low, which would have shaken you out or stopped you out, or would have failed. Hopefully this is enough of a move, and you could have used the inside 5 low, but it goes back to what we were just talking about. You're relying on pure momentum to pay you, which sometimes is okay. Hopefully this is enough of a move up here where regardless of your stop, you got your risk covered. I am just eyeballing it, and it looks super close versus this low, and whether or not you would have gotten that risk covered. I like it. I like it. Opening volume looks decent. Daily chart looks phenomenal. Phenomenal, right? You got a lot of things on the side of your trade here. So if you took this and you got stopped out at the low or in the break of the inside 5 low, I can't fault you for it. I like it. Yeah, a little bit extending the 5 minute, but that's why I'm talking about using this low as your out. Maybe even better than a B minus because of the daily. You know, B. Maybe B plus, probably B. Is Amazon forming a double bottom pattern? It did, yes. We've spoken about this one. I mean, we called out the double bottom in Amazon on May 25th, though it only has confirmation when this high breaks. So we only had confirmation as of May 31st. So this is a technical double bottom pattern on the daily chart. The follow through, though, so you're late on it. The follow through 102.50 to 115.50, whatever. So what's that? Like $13 of upside, just eyeballing it, 115. It already did it. It already did it. This fulfilled the expectation of a double bottom today's high. So that's totally off the table at this point. Assuming you mean the daily chart, right? Yep. It's 100% off the table. It's done. It happened. Trader's there. It's a good one. Do you guys trade low caps on your desk? We will, especially if we think that there's a reason that thing could squeeze up. Sometimes those are the names that move 100% and continue after hours. There's a lot of that going on. There's a lot of that going on in the bubble back in 2020-21. I don't like trading stocks as a general rule. I trade less than 500,000 shares in a day, really less than a million shares in a day, but especially less than 500,000 shares. And I don't trade anything that's OTC or pink sheet. But a low cap stock that's listed that has liquidity, I'll trade it. Or even if it doesn't normally have liquidity, but it's just that crazy day for it where it could run 200%, it's a day trading vehicle. So sure. Prax. $1.90 book value of $4.28 for drug trials, but a lot of cash. Oof. Oof. This is why I don't trade individual biotech stocks. When you build in, do you only add after you cover the initial position? No, almost the opposite actually. Once my risk is covered on a position, I don't ever really add new risk to it, to that trade. Yeah. Once my risk is covered in a position, I never want to turn a winner into a loser. I'm not looking to add. If I'm building in, I have a game plan. In Amazon, I had a game plan to be able to buy stock down to 123. Down to 123, the pre-market spot I identified, the ADMA is above it. I had a game plan to build in and to basically keep buying all the way down to 123. And I knew exactly what my risk is, more or less. And if I get stopped out, well then, you know, I put my trade on, I put my risk on, and I got stopped out. It happens. Running out of time here, so I gotta wrap up. From Tommy, I bought Labu today. Ugh, so disappointing. Just a small position, but do you think it's setting up for a breakout? Yeah, so we spoke about the XBI a little bit already. I was so pumped about how this XBI traded on Friday. I was so pumped. Bought this thing on Thursday, took a big ad on Thursday, got lucky a little bit, super relatively strong, sitting above 71.50. Looks like it wants to break out. Today had a breakout failure and was relatively weak. Today is not what you want to see if you're long XBI and Labu. So I would say follow your game plan. For me, you know, the 66 support is key on the downside for me. That's what I'm looking to probably hit out of the position at this point. Because I added and I tightened up my leash on the stock. I'm hopeful. I was really excited after Friday. Today's just not what you want to see. Guess on Friday's CPI, I got no idea. My guess is that inflation's continuing to work its way down, specifically ex-food and energy. Ex-food and energy, I think we continue down. With food and energy, it becomes more difficult, but technically what the Fed cares about is ex-food and energy. But it's a pure guess, pure guess. All right, guys, I got to jump here. 4:58. You know, not a terrible day. Certainly not a good day. Disappointing. So hopefully everybody navigated it okay. So risk management is always number one. Have a great night, everybody. I'll see you tomorrow.